Barron's has reported from AP News, China, Brazil strike a deal to ditch the dollar for trade. Hi everyone, I'm Zach with the Money Channel, and I think it's best that we dive into it. As an overview, based on the story, China and Brazil have agreed to trade in their own currencies, bypassing the US dollar as an intermediary, allowing them to conduct direct trade and financial transactions with their own currencies. The deal is expected to reduce costs and promote bilateral trade and investment. China is Brazil's largest trading partner with a record $150.5 billion in bilateral trade in the last year. Inflammatory headline aside, they are just creating a mechanism for some trade, but that doesn't solve the underlying fact that A, nobody in China wants reals, and B, nobody in Brazil wants yuan. Most trade will still be conducted in USD, it's still the only easily convertible currency by a long shot. I agree completely with your 2 points based on the little I know, and forgive my ignorance, but what does this new arrangement change exactly? I thought the currency that was used was just determined by the contract between the importer and exporter. It's a mechanism for direct transference, basically, and performed by the bank. You pay in real for a China product and the bank does the conversion for you and vice versa. Not quite so simple though, because there is a trade deficit. One side will always have less supply of the other's currency. To solve that, they use USD. It's a modest change at best. People don't use USD because any government mandate for the most part. It's just a currency that holds value for both sides of a transaction. Why does nobody in Brazil want yuan? Seems like a convenient currency to trade in with the largest trading country in the world. China maintains strict capital controls that makes it difficult to move the yuan around. Nobody wants to use the yuan because nobody wants to use the yuan. That may seem to be a flippant answer, but a currency needs to have people who provide it and accept it to be useful. China doesn't really provide yuan, and not many other countries will accept yuan. USD status as a reserve currency isn't going to end anytime soon. It needs two things to happen. US economy needs to fail, and US military lose strength. There's a reason capital still flees to US markets anytime there's worldwide recession, and why everyone wants to be paid in dollars in international trade. As long as people believe they can redeem their US dollars, they'll continue to trade in it. This petrodollar nonsense needs to stop. USD isn't world reserve currency because of oil or whatever. It's world reserve currency because the US has the economic wealth to back it. That's all there is to it. People trust the dollar to be the most stable currency. Only way USD loses its reserve status is when US economy crashes and the US starts defaulting on its external debt, or if a new military power becomes stronger than the US. The US economy doesn't even need to be stable. As long as the US economy is more stable than any other sizable powers, you're good. Michael Pettis talks about this in his book Trade Wars Are Class Wars. If I trade in yuan and have excess yuan, what do I do with it? Would you put your money into the Chinese capital markets? Chinese gov bonds seems like good places to store cash. Are the capital markets large enough to support the inflows? If not, are China happy to run a deficit to facilitate the inflows? If I end up selling yuan to buy other currency, what's the point of doing the trade in yuan? It only makes sense that the balance of payments is basically equal. China buying the same total value of goods from Brazil as Brazil buys from them for an export-led country like China, that seems unlikely. It's pretty wild to say in the statement that the petrodollar isn't what underpins the USD's reserve status, while simultaneously saying that it could lose that status if the US military loses strength. What do you think the US military has been used for over the past 30 years? My friends in banking are saying that this is a massive deal and a sign of things to come. It's the first step in the direction for not having the US petrodollar. I'm not well versed enough to truly understand this, but I don't know. My banking friends are saying the implications are massive. China and France did their first yuan energy trade one day ago too. The US dollar as world reserve currency was never going to last indefinitely, going by historical norms. American hyper-hegemony that came after the fall of the USSR is not bound to last forever either. If anything, you can argue it's shown cracks, if not already broken. Sometime around the GFC to the Crimean invasion in 2014, more likely there is a multipolar world with multiple players. You can't say you're a hyperpower when Russia's Ukraine war is a direct and open contest to Pax Americana. China increasingly does what it wants. Same with India and the Middle East increasingly doing whatever they want, and Brazil and Latin America emboldened playing both or sides. That said, a multipolar world doesn't not mean American decline so much as a decline of American influence relative to all other parties. It's not a surprise that we move towards a multipolar world because most, if not all, parties want more influence and will act to achieve it even if it means less relative American dominance. That includes even our closest allies, the Europeans or the Anglosphere, who often align ideologically, politically, work closely with the US and see us as a leader or guarantor of downward pace. Even they would want for themselves more say in their US relationship, a US that listens more and goes guns blazing less, and to have more of their own influence in geopolitics outside of their US relationship. Same goes with the dollar. USD might have a smaller influence as the euro, yen and yuan eats away at its dominance. However, it's still going to be the biggest player. Euro is tied to Europe and their problems of age, population, war, disunity, etc. Yen is euro, but smaller, older and more debt-ridden. Yuan suffers from China's trust issues due to CCP's actions as well as lack of float. Of course, Washington doesn't want this nor wants to admit it. In my opinion, it is still acting as if it's the case. Personally, I feel we should really be focusing more on rebuilding ourselves and playing the multipolar geopolitical game in the long run. Not so much in the isolationist America we were before the World War, but we might want to go back to the more nimble Cold War era America where we push our international agendas while working with multiple parties on multiple fronts in multitude of ways. That Cold War America was actually a superpower compared to the hyperpower America at the end of World War II, where most of our old world was crushed. America had the manpower and industry to keep fighting and was the sole nuclear power. With time, the European Five, along with the USSR, quickly rebuilt and got nuclear weapons of their own. The USSR in particular became a superpower in its own right. At that point, the US became antagonistic and started playing the great geopolitical international power game. USSR might not have fallen as soon, if at all, if there wasn't the Sino-Soviet split and China shifted from towards the US and capitalism. With Chinese socialist characteristics, the more longer we act as an individual hyperpower in denial, the longer harder it is for us to make the right actions, thus further digging ourselves in a geopolitical hole. The US is still the most stable currency, but it's by far not as stable as it once was. A lot of that is because of choices that have been made even though everyone knows it would lead to destabilization. Many will say that this was eventually going to happen, which is very true. At the same time, certain people sure have helped make it happen even though they were warned beforehand. Well, it was also the fact that many countries leaned on the USD back in the 70s because we promised to go eventually back to the gold standard. Nothing is as permanent as a temporary government measure, is there? For what it's worth, I also have some friends in finance. This deal is huge given how big of an economy Brazil is. It is still an emerging market, and let's not forget the potential for Africa and Latin America, places where the Chinese have very strong financial foothold. All my friends in finance say this is purely symbolic and has little impact on the dollar. Yes, part of how we calculate inflation is directly tied to velocity, but $150 billion less trade with the US dollar is a drop in the bucket. Besides, they both have other trading partners that will refuse trade in any other currency. They can use alternative currencies with each other, but at the end of the day, they'll still be using the US dollar the majority of the time. It is symbolic today, but the problem is when multiple nations all have these symbolic deals and they start actually swapping yuan between them. Reality is just that the largest trading partner of multiple nations has the advantage in obtaining reserve currency status, and China is the largest trading partner with the countries doing these deals with them. It'll be a serious issue in a few years because they will seriously impact the value of USD. Longer term, maybe medium term, depending on how much the momentum gets. For now, the US is still its own worst enemy as far as that goes. Nations settling in their own currencies will be limiting to their import-export balance. Exceeding that will cause the valuation of their currency to fluctuate in such a way towards an equilibrium point. You want to run an export-driven economy, you will find the value of your currency continually increasing and forcing it to the other way, making your exports more and more expensive. Run a trade deficit and you're looking towards the barrel of inflation, your central bank can't help you with very well. The dollar allows other nations to operate in ways that would be heresy in classical economics. Sustained large trade surplus and keep your currency pinned down, why not? The dollar and euro-dollar system is what allows a system of interconnected economies work in an impossible way. Ditching it would mean going back to rules on how economies work that most people with degrees in economics think are archaic and dead, if they think they were even right at all. Is the world ready to go back to that set of rules? I doubt it. But China will convince them they are to their long-term detriment. US can kick anyone out of SWIFT from anytime they want. Every country is looking for an alternative now. A lot of countries in South Asia have already impacted such deals, not saying things will be different overnight, but slowly everyone is trying to get away from their overdependency on dollar. Rome didn't follow overnight. I don't know, I wouldn't trust Chinese banks over US banks, period. The EU can, not the US. SWIFT is controlled by Europe. So this is a big deal, but also a big risk. China's economic situation is terrifying, albeit unreported. Local governments can no longer raise revenues from property sales, leading to huge debt and service cuts. Meanwhile, national government has been lending money all over the world at high interest rates to troubled borrowers who will likely default. Meanwhile, their population is on the brink of generational collapse. China has a lot of people, but that doesn't mean it's guaranteed to have a successful economy. The thing is, people like using dollars in part because of the security of the US financial system, which, jokes aside, is still one of the most reliable in the world. You can move as much money in and out of the country as you'd like with reliable regulated markets and transparent rule of law. Meanwhile, banking in China is a whole other ballgame, pretty sketchy, very opaque, strict currency controls. So while I'm sure some countries will trade in RMB, the issue is that ultimately this ties you into the Chinese financial system. I think time will show that this is not a great idea. China is not the rising superpower people think it is.